This video is for informational purposes only and should not be considered financial advice. Always do your own research or consult with a financial advisor before making any investment decisions. Welcome back to Smart Market Watch. In today's video, we're breaking down one of the most important concepts in investing: dividends. If you've ever heard people talking about dividend stocks or earning passive income from dividends and wondered what it all means, stick around. We've got you covered. So let's dive in. What exactly is a dividend? A dividend is a portion of a company's profits that is paid out to shareholders. When you buy shares in a company, you essentially own a small piece of that company. If the company does well and makes a profit, it might decide to share some of those profits with its shareholders in the form of dividends. How do dividends work? Now, not every company pays dividends. Typically, large, well-established companies with stable profits are more likely to pay dividends. Think of companies like Apple, Coca-Cola, or Johnson & Johnson. These companies are known for consistently paying dividends to their investors. Here's how it works. If you own a share of a company and that company declares a dividend, you'll receive a payment based on the number of shares you hold. For example, if the company declares a dividend of $2 per share and you own 50 shares, you'll earn $100 just from holding onto those shares. Dividends are usually paid on a quarterly basis, though some companies may pay them annually or even monthly. This means that as long as you hold the stock, you could receive regular income from the company. You might be wondering, why do companies pay dividends? Isn't it better for them to reinvest that money back into the business? Well, dividends serve as a way for companies to reward their shareholders and attract long-term investors. By offering a dividend, companies show that they are financially healthy and confident in their ability to generate profits. It also gives shareholders a reason to stay invested in the company, even if the stock price doesn't go up significantly in the short term. So, why should you care about dividends as an investor? For one, dividends can provide you with a steady income stream, especially if you're holding shares in a company that consistently pays dividends. This is why many retirees and long-term investors love dividend-paying stocks. They can be a great source of passive income. You don't have to sell the stock to make money. You just need to hold on to it, and you'll continue earning. Secondly, dividends can boost your overall returns. Even if a stock's price doesn't rise dramatically, the dividend payments you receive can make a significant difference to your long-term gains. Over time, reinvesting those dividends can lead to compounding growth, which helps your investment grow even faster. But, like any investment, dividends come with risks. There's no guarantee that a company will continue paying dividends. If a company hits tough times or profits decline, they might reduce or even eliminate their dividend payments. It's also important to note that companies that pay high dividends may not offer as much growth potential as younger, fast-growing companies that reinvest their profits back into the business. That's why it's crucial to research any dividend-paying stock you're interested in. Look at the company's financial health, its dividend history, and whether the company can sustain those payments long-term. So, should you invest in dividend stocks? If you're looking for a stable source of income and want to build long-term wealth, dividend stocks can be a great option. Just remember to diversify your portfolio and consider both the risks and benefits before making any decisions. Thanks for watching this video on dividends. If you found this information helpful, be sure to hit that like button and subscribe to Smart Market Watch for more stock market insights and investing tips. And if there's any other topic you'd like us to cover, drop it in the comments below. See you in the next video!